Today we'll be discussing an important concept in technical analysis: golden cross. Golden cross is a bullish technical indicator that occurs when shorter-term moving average crosses above long-term moving average. In this lecture, we will cover what golden cross is, how it is being calculated, and its potential significance for traders and investors. Golden cross is a technical indicator that occurs shorter-term moving average, typically the 50-day moving average, crosses above a long-term moving average, typically the 200-day moving average. The crossover of these two moving average is considered to be bullish signal for trade. It's considered to be bullish signal for traders and investors. Golden cross is calculated by plotting two moving average on a chart: the 50-day moving average and the 200-day moving average. When the 50-day moving average crosses above the 200 moving average, the golden cross signal is generated. Traders and investors can use this signal to enter a long-term position or add an existing position. Potential significance of golden cross for traders and investors. Golden cross is a popular technical indicator among traders and investors because it can provide a bullish signal for a stock or market. The signal indicates that the stock or market is experiencing a trend reversal and may be entering into a new uptrend. Trader and investor can use this signal to enter a long position or add an existing position. Golden cross can also be used in combination with other technical indicators and chart patterns to confirm a bullish trend. The question is, what are the limitations to golden cross? While golden cross can be a powerful bullish signal, it is not foolproof. Market can be unpredictable, and a golden cross signal does not guarantee a sustained uptrend. Traders and investors should use golden cross in combination with other technical indicators, fundamental analysis, and risk management strategies to make an informed investment decision. Golden cross is a bullish technical indicator that occurs when a shorter-term moving average crosses above a longer-term moving average. It can be a powerful signal for traders and investors to enter a long or add an existing position. However, it is important to use golden cross in combination with other technical indicators. Thank you for listening to this lecture on golden cross.